Okay class, today I'm going to show with you about the issuance of loan instrument for the two loan instrument, which is redeemable preference share and also the debentures. Okay, so last video I have done about explanation on this part, the journal entry for both loan instrument, which is redeemable preference share and also the debentures, and I hope you take part on this video, last video. Okay, today I'm going to share how to use that journal entry in answer the question. Okay, the first thing we look at the first example, which is redeemable preference share loan instrument by using the first method, which is amortized cost method. Okay, the first thing, once you read the question, you have to see the example here. So we got the 1st January 2011, the company issue 5 million 5% redeemable preference share at RM1 ringgit each and redeem at a premium of 10% on 31st December 2018. Okay, once you get a question, the first thing you have to identify the date of issue. So in this situation, the date of issue is 2011 and at the 1st January. The second one, you have to know the nominal value of loan instrument. So in this loan instrument, we have 5 million as a nominal value. So in this situation, the company decided to issue the redeemable preference share with the dividend rate. Dividend rate here is a 5% here, 5%. We call it, if the company issue redeemable preference share, 5%, we call it as a dividend rate. At what situation to issue? They want to issue at par, which is the issue value here is RM1 ringgit times with the 5 million, so the issue value here is at par, RM1 ringgit, which is 5 million. And they want to redeem at premium 10% after the 4 years on December 2014. Okay, in this situation, the redeem value after the 4 years will be 5.5 million after you time 110% here, because they want to redeem at 10%. So 10% it become 110%. So during the loan period, the company will have an obligation to pay a borrowing cost 215 for each year end of the year. So in this, recognize the loan during the loan period, the company will recognize the 5 million as a liability. And the effective interest rate, normally if the company want to follow the amortized cost method, they must given with you with the interest rate or effective interest rate is like the market rate of loan or BLR. So during that time, the interest rate is 7.3% for effective interest rate. Okay, so then we see the journal entry. The first thing, before you start the journal entry, you have to calculate the nominal value here is 5 million. There is no premium or discount because they issue at par value. And the carrying amount become a 5 million. There is no transaction cost incurred, and the carrying amount of Z here is become a 5 million. This one is carrying amount Y. Okay, next, what happened to your journal entry? So this one is the calculation just now. So the journal entry for you, you have to record at the date of issue. This one is the issued date on the 1st January. So you have to debit bank, credit 5% redeemable preference share at a nominal value here. Okay, so nominal value Y here. Okay, on the same year, at the end of the year, December 2011, you have to record the interest paid because there are borrowing costs incurred for the company to pay. Because one company issue loan instrument, the company have the obligation to pay an interest or to pay an dividend. So in this situation, you have to debit interest expense ataupun dividend expenses 7.5% and 7.3% times with the 5 million, which is the CA value Z here. Kena guna Z. Sekarang Z dengan Y sama, tak ada masalah lah. Darab dengan 5 million. Credit bank at the dividend rate 5% times the 5 million. And this one, 115 credit 5% redeemable preference share, it become the balancing figure. Yang saya color-colorkan warna kuning ni balancing figure. So mean end of the year 1, at the end of the year 1, start 5 million. So at the end of the year 1, akhir tahun pertama, your redeemable preference share akan bertambah. Maksudnya tambah dengan 5 million, dia akan bertambah. Okay. The next year for the end of the year, you don't need to record at the beginning because on the 11, you just record on the issue. at the end of the year for the second year, you just have to record the interest expense ataupun dividend expenses. So same 7.3% which is effective interest rate times with the 5.115 million. 5.115 million, that is the value for the redeemable preference share end of year 1 here. 5 juta yang ni saya kata tadi tambah dengan 115. So this is the end value for the year 1 your redeemable preference share. Credit your bank will be fixed. Every year will be fixed percent. And credit redeemable preference share the balancing figure. So end of the second year, your redeemable preference share will be increased. Okay. The next year, December 13, same journal entry. So on the interest expense or dividend expense, still have to times with the effective interest rate with the new value of the redeemable preference share. This one is the value of preference share at the second year, end of second year. 5 million for the first year, second year, so it become the third year. Kena tambah kat sini, 13. Okay. So dia akan jadi 5.28. Credit redeemable preference share, so you dapat balancing figure. Okay, the last year redeem. Pada tahun awak nak tebus, debit interest expense, credit bank, credit 5% redeemable preference share. So this one will be different. So you have to bear in your mind at the year of redemption, the loan instrument value must be at the redemption value. What is the redemption value? So redemption value just now they want to redeem at premium 10%. So if we memorize back the redemption value just now we got 5.5 million. This is the redemption value. So the redemption value at the end of the year 5 million 5115 plus 123 plus 132 there must be 1.5 million. So in this situation the balancing figure change from the redeemable preference share it become to the interest expense here. Tak sama dia dah berbeza. So redeemable preference share kat sini 130. How I got 113k? So the value of redemption of preference share at the redemption year or redemption date, so minus the total redeemable preference share along the loan period, so you got another balance 113. Okay, that is the journal entry for amortized cost method RPS. Okay, the next year redeemable preference share, but they're using the next ataupun the second method which is fair value method. So in this situation, same as the first situation, you have to identify the date of issue. So the date of issue here is become a 1st January 2011. So that is the date of issue. How much the nominal value? Company issue 5 million. So this one is a 5 million. That is the nominal value of your loan instrument. What type of loan instrument? The loan capital or borrowing cost here is the 5%. The redeemable preference share, they want to issue the RPS. What situation they want to issue? They want to issue at par because at RM 1 ringgit at par. Par ni biasanya 100% lah. Kita anggap dia RM1 tu adalah 100%. And they want to redeem at premium. So dia maksudnya issue pada harga par, redeem pada harga premium. So bila redeem pada harga premium, so dia punya loan period selama 4 tahun. The 5 million times 110%, so they must redeem at 5.5 million. Sama juga they have a borrowing cost, and you have to know once company issue the redeemable preference share by using the fair value method, so the question must given with you the market price of your loan instrument for every year loan period. So in this situation they give you in term of the RM, so you have to calculate by your own. The total value of loan instrument for the year 1 is become 5.25 million. How I got 5.25 million is 105 times with the 5 million. Okay, and you plus the 5 million. So you dapatlah and seterusnya. Okay, so what happened to your journal entry? So before you start journal entry, you have to calculate the nominal value, premium discount. So it will be same CA1 and CA2 sama je. Fair value actually dia tak ada CA lah, sama je. Okay, 5% darab dengan 5 million kat sini. And dia akan dapatlah kat sini 5 million. Okay, and credit your bank. So change value. Maksudnya bila guna fair value dia ada 3 journal untuk 1 tahun yang pertama. Journal entry issue date, journal untuk bayaran interest ataupun dividend, and journal change in the fair value. So for the change in fair value for the first year, retain profit debit, credit 5% redeemable preference share. So you have to start with the market value for the year 1, MV1 minus the CA here. CA here is a 5 million. So you got 215. Dan seterusnya 2012 kita akan guna market value year 2. Okay, year 2 minus the market value year 1. Okay, ni 2, ni 1. Sama juga tahun ketiga market value year 3 minus market value year 2. And tahun keempat at the value ataupun the redemption date. So you have to take 5.5 million. Ni silap ni tak ada ni. 5.5 million minus 5.4 million. Market value year 4 minus the market value year 3. So you got the 100 here. Tak ada perbezaan. Okay. Next is a debentures. Tadi RPS, sekarang debentures. Same, masih benda yang sama. You have to identify the issue date, what type of loan instrument. So in this situation, we have 1st January 2011. We have Ayu Berhad. They issue 4% debentures at the nominal value 2 million at 97.5%. Okay. So as I said just now, the issued par, premium or discount, it can be 100%. It can be RM 1 ringgit. Okay, and the effective interest rate 7%. So automatically when they give you the effective interest rate, so that is the amortized cost method. Cost related during the issuance is a 100,000 and the debentures will be redeemed at par value in year 2013. So dia tak nak tebus pada tahun ke-13, issue pada tahun ke-11. So dia issue pada 1 Januari. So the 2 million, the 4% debentures, they want to issue debentures at the rate interest 4% here. 4% kat sini, nama depan dia 4%. With the nominal value 2 million at the situation issue value at 2.5 discount. How I got 2.5? 100% minus 97.5 kat sini ya. So that's why I got the value discount is 2.5%. Effective interest rate, that is a 7% effective interest rate, and interest date is 31st December. And you have got the transaction cost 100,000 and they want to redeem at par. At par, so the par value after the 3 years, they want to redeem 2 million times 100% sebab dia nak redeem at par. So maksudnya lepas tahun ketiga, dia akan redeem pada nilai 2 million. Tapi dia issue pada harga discount 2.5 million. So situasi di sini, issue discount, redeem par. Okay. So this is a calculation for you to identify the nominal value and also the carrying amount. So we start the nominal value with the 2 million. Discount, we have to minus 15,000. So you got carrying amount Y here is a 1.95 million minus transaction cost 100,000. So you got the value CAZ is 1.85 million. Okay, how to transform this calculation to the journal entry? Okay, so you have to record the journal entry on the issuance date, issue debentures, debit bank, credit 4% debentures with the value CAY. Ya, kena ingat ni value CAY sini, 1.95. The next transaction cost, if you follow the amortized cost method, so your transaction cost should be debit 4% debentures with the 100,000. End of the year 1. So maksudnya tahun pertama you have to pay an interest. So you have to record debit interest expense, credit bank, credit 4% debentures. So interest expense you have to take it the effective interest rate times with the value 1.85. What is the 1.85? That is the CEZ here. Okay, kena ambil. Credit bank 4%, 2 million. Okay, sama je. This is a borrowing cost just now. And credit debentures, that is a balancing figure. Yang saya color kuning ni, that is a balancing figure. The next one, interest expense 7% times what? 1.899.5 million. What is it? So that is the value from the this one, from the CA1, CAZ here, Z plus with the year 1 punya 4.9 yang kat sini dia plus yang kuning ni. Okay, so kita akan dapat value end of year 1. Ni year 1 punya value. So darab dengan efektif. So dapat 132. Same fixed 80,000 for the interest expenses and you got the balancing figure for your debentures 42965. So every year your interest, your debentures will be increased. Okay, the last year for the redemption here. So redemption here, you have to same journal entry, but you have to know that situation is you have 7% effective darab dengan year 2 punya value of debentures. Okay, credit bank, credit debentures. Why I here? Because in this situation, the redemption loan instrument must be at the redemption value. Redemption value here now in the situation is 2 million. So maksudnya pada harga par. Kalau kita ingat balik yang RPS tadi, the redemption value pada harga premium. So balancing figure dia akan jadi dekat sini. Tapi sekarang balancing figure kita ada dekat debentures. Sebab kalau kita tambah debentures tu akan bertambah lebih. Nilai dia dah terlebih pada redemption value. That's why dia jadi begini. Okay. Next, debentures, issuance debentures but using the fair value. Sama juga, the first thing you have beza dia untuk kalau fair value dia mesti bagi awak the market value. Okay, mesti ada date of issue, mesti ada value issue at premium 5%. Maksudnya dia nak issue at premium 5%. So di sini nak issue date 2013, 4% debentures, nominal is 15 million, premium is 5%, issued value, so maksudnya dia nak issue pada harga premium. Cost related 100,000, debentures redeem at par. So sekarang issue premium, redeem at par. So how to calculate? So the nominal value is 15 million. Premium issue at premium. So kita kena tambahlah 5% dapat 750. So you dapat carrying amount 15.75 million. So untuk fair value kita tak ada transaction cost kat sini, but transaction cost kita akan masukkan dekat dalam sebagai expenses. Itu beza dia. Okay, so this one is the redemption value. Maksudnya pada selepas 2 tahun your redemption value at par, so dia akan jadi 15 juta balik. Tapi sekarang issue pada harga premium. Okay, for this journal entry, for the issue at premium but you want to redeem at par. So on the first year, on the beginning, on the issued date, so you have to debit bank, credit your debentures as usual. Tak ada masalah. Okay, the next one, transaction cost, we have to debit expenses or the retained profit if you follow the fair value method. So for the transaction cost, you have to write off as your expenses and credit your bank. End of year 1, you have to pay an interest. So debit interest expense and credit your bank with the value borrowing cost here is a 4% times with the nominal value. And also the change fair value for the December 1 here. Sini ada perbezaan sikit ya sebab kita issue pada harga premium. So CA kita Y kat sini adalah 15 juta. But at that time the market value is 14 million. So maksudnya debentures kita akan berkurang. So kita akan dapat more profit here. So maksudnya hutang dia berkurang lah. Profit kita 175 sebab kat sini ini adalah market value 1. Saya punya formula market value 1 kena tolak dengan CA. So dia akan dapat negatif. So bila dia negatif dia akan berubah. Kalau awak tengok journal yang sebelum ni dia debit profit and loss, credit debentures. Tapi in that situation you have to debit 4% debentures, credit profit and loss. Untuk the end of year 1 ini semua adalah untuk year 1. Okay. So masuk tahun kedua December 14, debit interest expense credit bank ni tak ada perubahan 4% times with the 15 million. Okay, change in the fair value. So also in that time is the redemption date or redemption year. So sama je kat sini dia tak ada perubahan sebab market value 2 is more than a market value 1. So you have to debit profit and loss, credit 4% debentures. Tapi untuk end of year 3 ni dia berbeza sedikit ya. So and make sure end of the year redemption your total loan instrument must at the redemption value. Okay, that's all for video today. So I want you to proceed with the tutorial part in Gen Laza book, question 3.1, 3.2 and 3.3 as your homework. So I will be assess this answer or this question during the next online class. Okay, thank you.